According to the Department of Housing and Urban Development, more than half of all home foreclosures are the result of either the death or the disability of the homeowner. Because every year, thousands of homeowners in their 30s, 40s, and 50s are critically injured in an accident or diagnosed with an illness or disease like cancer that either results in their death or results in their permanent disability, which keeps them from working and earning an income. And without their regular monthly income, many of these families are forced to move out of their homes and away from their friends and neighbors, schools and communities. Of course, no one wants to think about losing their home, much less about their own death or disability. But those are the facts. We are all at risk, every one of us, for an untimely death or a permanent disability from a critical injury or serious illness that results in the loss of our monthly income. Even households with two incomes quickly discover that they can no longer afford the mortgage payment on just one salary. Like the 46-year-old attorney undergoing chemotherapy and radiation treatments for breast cancer, which has kept her from working for more than a year now. With only her husband's salary, the family's household income is only half what it was when she was working, and it simply isn't enough to keep up with the mortgage payment on their new home, as well as school tuitions, car payments, property taxes, and health insurance. Or the 38-year-old salesman who's been physically disabled and unable to return to work for several years now after a severe back injury from a head-on collision with a drunk driver. Although his wife is working, she's earning less than half of what they needed when they originally qualified for their home mortgage. Ask the 44-year-old mother of two young children whose husband died at 46 after a 2-year battle with pancreatic cancer. Or the 42-year-old father who was left with two young children when his 39-year-old wife was killed in a car accident. Ask them if they ever thought they would lose their home because they could no longer afford their mortgage payments. So how can you protect your family's home from the risk of your death or disability? With mortgage payment protection. Mortgage payment protection is actually two types of coverage. One that will pay off your entire mortgage tax-free if either you or your spouse were to die in an accident or from any illness or injury. And another that will send you tax-free money every month to make your mortgage payment while you are unable to work and earn your regular monthly wages or salary because of a long-term illness or injury. Think of it like this. Your mortgage lender or bank requires insurance on your home to protect the value of the property from the risk of natural disasters like fire, storms, floods, or earthquakes. But the mortgage payment is entirely dependent on the homeowner's income. So doesn't it also make sense to insure the homeowner against the risk of death or disability? You can even get coverage with a full refund if you never have a claim. What's more, if you sell your home and buy another, you can keep the coverage and apply it to your new mortgage. So ask yourself this. Does it make sense to assume that you will never become one of the 48 million people currently classified as disabled by the United States Census Bureau? Or one of the 500,000 people between the ages of 30 and 60 who die every year? Or does it make better sense to insure your home ownership with mortgage payment protection? After all, isn't it better to know that your family will always live safely and securely in the same home, in the same community, with the same friends, neighbors, and schools, than to regret that you could have insured your mortgage, but decided not to?